There we go, boys. We are live. Awesome, awesome, awesome. Awesome. We're back. We're doing some financial modeling this time. Not doing any zombies this time. I'm sure a lot of you are wondering why I didn't do a video on Monday, and that's pretty simple. I could not go and sorry, one of my friends just tweeted something about the tweet link that went out. So I know some of you are probably wondering why we didn't have a video on Monday, and that's because there was a whole bunch of thunderstorms here in St. Louis, and unfortunately I was like, not sure if I want to go and do a stream because of the noise. And luckily I decided that was the right thing to do, because we ended up having a power outage here in St. Louis briefly, and it would have been right during the stream. So I'm glad I held off on doing the stream that day. And now we're back. The YouTube page, guys, the YouTube page, the long sought after YouTube page is up and running. You guys can go check out, once this tab loads, you guys can go and check out all of our past live streams, even if you can't find them on Twitch. It should look very familiar, you guys. If you guys see the Twitch page, got the same channel intro, we got some uploads, we get the modeling, we get the zombies. So yeah, guys, check that out. Link is in the about section and the Twitch profile, or you can just, same username for the YouTube page. Go check it out. And we are starting on probably what will be our longest model that we do, our most complex, and it is Sirius XM with both the Sirius XM and the Liberty Media tracking stock LSXMA. So I've yet to do all the financials for Liberty Sirius. I actually just read their annual report last night, just to get back into the feel of why they're in the business and stuff like that. So it's pretty much two models, because I got the DCF and stuff over here, two models into one. So what I think I'm going to do is, while I finish doing the financials for Liberty Media, I will start off on SIRI. That way we can value SIRI, we can then value Liberty Sirius, and then kind of combine them and see what types of discounts are available, because Liberty Sirius XM is essentially Liberty Media's 70%, or if I recall correctly, there's 72% stake in the common shares of Sirius. So they own quite a bit. So the whole theory is you get the same exposure to Sirius XM but at a discount. So we're going to go and see which one's a better buy. If you just want to go and buy Sirius, if you just want to go buy Liberty Sirius, we're going to go and look through all that, do all the financials, find out what they're worth. It should be a fun time. It's going to be a multi-parter, more than probably double what match was. So in this part, my goal, and I'll add the description depending on what we end up finishing. My goal is to at least do the revenue build, and maybe the revenue and subscriber build, and maybe the income statement. Maybe. That's a high maybe. Typically, guys, I want to go and keep these at about an hour to an hour and a half, because I know sometimes the content can be boring, and just it's nicer to keep these shorter than zombies. So we will go and get to it. Unlike the last time when we went and did a build with subscribers, which was Match.com, I'm actually not going to go and do it based off of ARPU. ARPU, average revenue per users, of course, guys. Because there's two reasons also. SiriusXM bought Pandora about Q1 2019. Yeah, Q1 2019. So you can go and try and model out the ARPU for both Pandora and the ARPU for SiriusXM, and that's going to end up being a gigantic pain. I just want to copy. No, never mind. It's going to be a giant pain to go and do, and I'm not necessarily looking forward to it. And also I thought what would be smarter would be to just go and do. Of course, that was currency. I thought it would be smarter as I go and finish up some of this formatting stuff. I thought it would be smarter for us to go and do. I thought it'd be smart for us to just do a normal rev build, and then that way we can control things a little bit more, because one of the big things that happened with Match was some of the format painter. Oh, that's right, I merged all of it. Merge in center. Oh man, this is why you should never merge in center. So I thought we would probably just kind of go and do a regular revenue model where we go and try and do some assumptions and stuff like that. That way we can go and more easily break out each individual revenue line item. And also, once I go and finish up some of this formatting stuff, guys, thank you for bearing with me. Jack the Player, good morning, my dude. You must be over in Asia or something if it's morning for you, because it is late over here. So once I finish doing some of this formatting stuff, I'll go and show you. You guys can probably already see some of the oh, Korea. Nice, my dude. Well, thank you for joining the stream. Once again, like I said, guys, just once I do some brief formatting stuff here, and I'll go and change all that eventually. Why did I even do that? Screw it. I know I'm gonna have to do this for the next page too, so I already apologize, guys. Alright, so one of the things that happened when I was doing some of this early stuff, like the ARPU calculation, it's not straightforward as Match was, because if you remember from Match, it was just, okay, we just have people paying for the premium service, and that's it, right? Here, it's a little bit different in that, just want to double check something real quick. It's a little bit different in that it is their subscriber revenue, excluding connected videos, plus advertising revenue, plus other subscription revenue minus related. It's a lot of like internal calculations that are a little hard to get if you're just doing it like how we are. So that's why you can see my kind of ARPU calculations do have a pretty wide variance versus for Match they did not. And I thought what would probably be easier, so if we just go and on our ARPU calc, we make it more of a growth rate. That way we can go in more easily, just have an ARPU there. I mean, I could go and backtrack it from what our revenue assumptions will be. It'll still be high, and we may just go and take that and suffer with it. But that's why I didn't want to do a straight ARPU rev build like we did last time for Match.com. And over here on Pandora, it's kind of the same way, where it's a blend of stuff. So I'm thinking about going and backtracking and recalculating some of that stuff, have the ARPU calc there, and then same thing, just kind of go and use the other revenue as a source, as the main bulk of the assumptions here. Oh man, merging and centering all this is going to be so bad. But it should be, oh, that's why you never merge and center. Dope. Okay, here's our ref build. And before we go and do all that, let's just grab all this delightful formatting. And paste it over. Yeah, guys, this is going to be a complicated one. I had to spend some time and just think about, like, how I was going to go and do this. And I finally came up with the whole, just kind of forecast out all these different forms of revenue, subscriber revenue, advertising, equipment, all stuff like that, and then kind of combine it all later on. Because I do have the total revenue up here, and you guys will go and see why it's going to be so complicated to do the income statement in this video. It does go and break down to several of these other parts. I may just go and just do it as total revenue. I'm not quite sure yet, because it's a little wonky. And it was a gigantic pain to go and do some of the pro forma stuff here and combine the two companies. That was a gigantic pain. So I did get a little bit lazy there. I will not deny it. I'll not deny my laziness. Oh, did that really not? Why did that not work? Oh dear. Is that why? This is just so annoying. Not very fun for you guys to watch either, I'm sure. Alright, now we're getting smart. Now we are getting smart over here. We'll just leave it at that for right now. Okay. So, if I recall correctly, total sub revenue should be 81, 286. It's not. That's like one of the weird things that you see here. Like, it's like a different blend of revenues, which is really weird, because we just did the quick. If it should be. Sorry. Actually, might have gotten that wrong. 1585. That's correct. Okay, so we can go and kind of build into the other ones. Oh, back on subs. Total revenue. I could go and make some of these total all that, but I might as well just make it a formula anyways. I think this is a good case for us to go and do our base, like do one of these things where we can go and say subscriber revenue improves, subscriber revenue doesn't improve, etc. I feel like that will be super helpful for us. I did go and already make some assumptions over here when it comes to COGS. And I feel like these, from rereading some of the 10K stuff and some of them, some other stuff, I feel like this is the programming and content cost staying flat seems about reasonable, because that's what they have to pay. They have to pay people. Satellite transmission is about going to be flat because they do have to send satellites up into space. Customer service and billing is the one where they really do have some leverage with having both Pandora and SIRI kind of attached to each other. That's the one business side that they do have a lot of operating leverage on. And I think some of these and things like sub acquisition cost, I think we can actually go and turn that down a little bit and some of that stuff. But yeah, I think that's the only type of forecasting I've done besides this. So going back to our revenue here. I do think having those different growth rates will be helpful. And how you do it is actually not that hard. I just want to see what's our normal growth rate here. What's our average? About 9.4%. All right. So we'll actually go and change this real quick and have our base be average growth is 9%. I don't know, maybe have base just be 7% growth and then have it gain maybe 1/10 of a basis point a year. So go over to data validation. And this is my list for that cell. If you guys don't know how to do this, this is a really fun thing. Let's just go and say base growth growth big increase. We'll do growth big decrease. That should go and change. Yep. So what we go and do. This is a good one. This is a good method to go and do if you're not sure. Because before we had a strong thesis on match. And this is just a good one to go and do if you're not sure about you know what. I actually should do that for the rest of them too. And this is kind of, it's a little less emotional because we don't have a strong thesis, or at least I don't. If you guys do, and you guys are making this model along with me, ooh, wrong move there. You know, you guys can go and do it yourselves. But this is kind of like, for me, it's also kind of a fact-finding thing too. And I'm sure I may edit it along the way, and if I do, I will inform you guys, just like I do with Match, about all my different changes that I go and do. Oh no, did I screw up already? No, we'll just keep it that way. 1, 2, 3. So then we're just gonna do base, increase, decrease. I just copy all these guys down. And what I will have to go into is have to go and grab a formula from a different Excel sheet because I haven't had to do one of these in a while. Which is something that everyone does. If you haven't done something in a while, you always reference back. At my old job, I worked with an analyst once, and I was like, oh, like, I think I screwed up. How to do this in the cash flow statement, stuff like that. He's like, don't worry about it. He's like, if you have a model that like where it all works out, he goes, just look back at that. He's like, that's what I always do. So even the big guys out there get it wrong sometimes or forget. Actually could be using my Spotify model over here. There we go. Because on the Spotify model, it has the same little thing. It has these great little things where should be, this is what I'm looking for. It's gonna be over here. I'm just gonna have to alter it a little bit. Equals, yep, if A26, I don't want that. And I'll go and walk you guys through this here in a second. So all this formula is telling us, right, is hey, year-over-year growth. If A1, which is our little drop down, says this, insert this. So that way if you want to flip through, okay, it's base, okay, it's improve or whatever, it can go and do it. It can go and just spit out the formula, right? However, the bad thing about doing this method is you have to have the exact term in. And by exact term, I mean you have to go and have whatever this says has to be exactly what's up there. So right now it's base, which is fine. But if we turn to, I always hate how it makes you do it like this. Big growth, big increase, we have to write exactly that way. So growth, big increase. And caps and stuff like that do matter. Spelling does matter. So if you screwed up your first time, you're gonna have to repeat it. So let's just go and just double check here. Let's call that 5. Let's call that 6. Let's call that 7. So we have our 500. That all checks out. Let's go to base. 6, okay. Seven. Okay, we are in business, guys. I'm always going to keep this at base just to start off. And what you can also go and do is, like on your front page, you can also say scenario type up here and have it reference that cell. So I'll even just do that right now. So it's just base. We'll go and highlight that. So if I were to go and change it to big increase, front page, big increase. Super simple, helps. You know, you can also loop it so that that goes and does whatever's on there, so that if you want to go and flip through that real quick, you can go and do that as well. I may end up doing that. Actually, because that way I can go and do it, and I can just go be from here and edit it and not from each rev build. So, okay. So that's all done on that one. We're going to just do the same thing here for every single one of these. Because as long as, you know, we still have our hard codes in there, it can, not our hard codes, our kind of cell locks on there, we can go and just copy and paste this all the way down, and boom, now we can just come up with our increases and all that stuff like that, and we can be good. So what I think I will go and do is to, first off, delete all those. I think I'm gonna just have this be the average of the growth rate and then have it build off of that. Yeah, that's sliding down now. Ooh. Cool. So for increase, I think it gains. It goes straight off of where this was. Oh my lord, that is some terrible formatting right there. Let's go and say it gains 0.2 of a basis point every single year to subscription growth up to 11.8%. Let's go and say that this starts off at 7%. Gotta go and do our input style here. Yeah, guys, I don't think we're gonna get to the income statement this video. We'll just actually use this, but we only think it's gonna go up by about maybe 1 basis point. And it's starting off at a lower growth metric, so we get up to about 8. You know what? You know what? Yeah, if you're growing 7% a year, I mean, you're doubling at the end. And decrease. Let's go and pretty much do the opposite of this. 7%, but let's make it like 6.8% instead. Let's just make it 6% flat. 6.2, just because I want the ending number to be like 4%. There we go. And then that way, whatever comes up here will always be I did make one critical error in that my red bill is based on quarters over here and not years. So I'm gonna have to do some weird trickery. But it's fine. But yeah, so what's important is all this works. And then percent of total, we can go and keep that the same. Actually, we can keep all of these the same. Year over year, we'll figure that out here in a sec. Yeah, I'm gonna have to figure out some trickery coming up here, boys. This is gonna equal the sum of these four. Times 1 plus whatever that says. Gonna look like a big number, but we can go and see down here. Actually, plus times 1 plus 0. Huh? Why did that? Oh, I know why. Because order of operation, guys. There we go. Now we're cooking with gas. So drag that along. Now we're starting to get somewhere, right, guys? Year over year growth rate is going to be tough for these because it's going to have to be me doing the same thing where it's going to be... Here it's not going to be that hard. It's just going to be... Oops. First one will just be a little bit of adjusting to go and do. But let's go and do that for the rest of these now. We'll just do the same thing that we did over here. And aside from there. And advertising rev. It's gonna be tough. Whoa, I'm surprised how well their advertising rev was. But it seems to have fallen off in recent years. Especially Q1. I mean, it reemerged, and some of these are a little wonky because of the Pandora increase. So I don't know. This is a tough one. Big increase. I'll start them off at 10%. And see where we go from there. Probably copying the similar one where I'm doing, could I be doing 8%? Probably 6%. I think this strategy over here, I think makes a lot more sense. I know it seems a little cut and dry as opposed to the way we did the last time, but this is like how like a lot of hedge funds guys and some of those guys do it out there. It's really lazy, but I don't know, I can always tweak it later. And it's not a name I have a lot of conviction on. I mean, some of these may be super, super optimistic. I don't feel like this is, given that when I'm looking at the past year over years, are all low to mid teens. So I'm actually bringing it down a decent amount. If you guys have any questions, by the way, of what I'm doing, why I'm doing it, please let me know in the chat. So we're just gonna keep rinsing, repeating. Equipment revenue, if I recall correctly, is one of the more bearish ones that they have, because it's all them leasing equipment to automakers and things like that. So it's like the hardware, and it's just a super tough business because you're relying on automakers in the hardware and stuff. But still a lot of growth there, which is kind of crazy. But this is one where I don't know, I think the base at like 7% makes sense to me. So I don't know, it's hard for me to really get a full, like, it's hardware still, it's not like software. Maybe 5%, maybe this is really, really harsh. I'll go and give him the benefit of the doubt on the 12% on the upside, because this is so far my most variant from the average and just harshest when it comes down to because yeah, I have them pretty much doing inflation growth rate terminally, and still on the base case of them just increasing every single year, still have them doing 500 basis points lower in revenue growth than what the average says that they're doing. So it's always funny to go and see like what is my unintentional mix shift, but I still have another thing to go and do over here. So if we do a pretty bad mix shift, I will go and change that, of course. Oh, I thought I screwed that up there for a second. Because I don't have a strong thesis in mix shift one way or the other. Oh, flat growth. Okay. I was sitting here going, what? Oh, wow, that's some low growth. So I guess our increase will be maybe they get to 1.5%. I'll have to really tune this down. We'll keep base at 1%, give them the gimme point. I don't know, but this seems aggressive now. I think instead, I think it should be maybe. That seems a little bit better. This maybe they grow by like barely anything. And same thing over here, but we're just gonna flip the numerator almost. We'll just keep that at 0. Kind of crazy that it kind of bumps up here, but then it continues down to like where it's normally been at. Yeah, sub as a percent of total kind of went down, but oh wait, okay, you're still chilling. All right, we're just gonna do. Whew, 6% growth. I don't know, they've been averaging. Why is. Oh, we made a critical error there, boys. Glad we caught that early. So I just dragged the formula over where it should not be that. It should be. Because it's summing. The reason why it's up 81% is because it's bringing in the next one. I can't believe I did not notice that. Yeah, guys, we are definitely not getting to the income statement tonight. Definitely not. Yeah, that looks a little bit better. Looks a lot better, actually. Looks a lot better in terms of growth rate. Right, it's a little bit of an uptick from what they were doing, but that's also quarterly. So if we average these out, they're doing about 7.3%, so. fact, I'll just take this entire thing and bring it down. Because it's the exact same formula that we did up top, but down below. And same with doing these. So this should be probably pretty equivalent to what SiriusXM does. The SiriusXM has a lot better business when it comes to this because they have a lot lower churn than places like Pandora. Uh-oh. That's right, they did not give us a ton of financials. Oh, again. That's super weird. I'll just do one of these. So I think we go the same route. That we did up top with that revenue. 7 seems a little harsh though. Uh, 6.2 seems still fair. That's a little weird though. It would only be 34%. Oh, because they have a higher ad rev business, of course. Ooh. A lot stabler, that's for sure. Just a formatting thing here that I'm going to carry over. Cool. Okay. Lavish, what's good, my dude? How are we tonight? Welcome to the other stream that I do. All finance all the time. Okay, I can do the same thing down here. Copying the formulas because it's what we need. Good, good. That's fantastic to hear, my dude. All right, increase. Okay, decent increase. We'd put these guys at 9%. Base seems somewhat appropriate, in all honesty. Just keep it at what it was and just use the formula where we're just going to increase it by about a little bit every year feels right to me. I could see this. It's just because it's advertising. So what do we do for advertising above? Pros equipment. We chopped it down because it was such a high bumpy growth rate, but 6%, 7% feels a little bit better, just because I feel like Pandora has a much stronger advertising base. I will reflect that here in my worst case as well. So that's making a significant difference. Cool. So all of our revenue has been forecasted out. And overall, we are growing by about 7% to 8.3% at the terminal here. Not bad. On our base. So if we get all fancy smanchy, and we do that big growth increase, that switch in the flipping the switch, if you would, bumps up pretty big, about 200 basis points. So what we could do right now before I do subs is we could go and do all of this stuff actually. So we will do our Sirius XM sub rev plus our Pandora sub rev advertising. We're going to do the same thing. We're actually going to go and make this green because even though it is a formula, it is coming from a different page. So we're going to leave that as green, drag that all across. Do the same type of deal with our advertising revenue, right? So Pandora, well, we want SIRI advertising first, plus that Pandora. Go and do it like that. Drag it across. You guys should start to feel the drill here by now. Equipment and other. Cool. I guess here I could also go, I may just go and slap down some growth rates. Just because we can always hide them. Although, I'm gonna have to delete this formula real quick and reshape it to be one of these guys. Doesn't affect it at all. Just methodology. Once you input some rows and stuff without the calculation being affected. Now there will be some wonkiness because this is when the Pandora acquisition went through, so there may be some wonkiness. Ooh. Dope. So we're chilling now. We're just chilling. And yeah, the reason why you see that big drop in other is some of their reshifting around after Pandora and stuff. So 2018, 2019 is really where you get some of the stability, except in advertising. So we see a big jump to start off with, but I mean, at the same time, they did just do the acquisition in 2009 and 19, so there should be a little bit of bumpiness, but it does smooth out. And if we actually look, advertising's below the typical growth rate. Equipment looks to be about somewhat in line. And other looks to be, doing about the same. So it looks like we kind of nailed it here, guys. But I mean, that should be expected, right? We took the averages of a lot of the other stuff and then put it in there. So what we'll also go and do is, I normally don't like, I might as well just hide them instead of creating like a little grouping. Alt 6 R, and there you go. It's all hidden. You can pop them open whenever you want to go and see. So alright, now we're going to do our subscribers, which will then go and get us ARPU and stuff like that. Then we're definitely going to end the video. Just because to do the income statement now would just be absurd. You always do net ads like that. You always do it based off of the previous one. The only thing that's going to be weird is that because I'm doing it at a weird growth rate. It looks like the average growth rate, I'm not going to, recently, has been, I'll keep it at about 2% and fade it down. %, fade it down feels kind of right. Maybe 2, yeah. And fade it down maybe by a basis point every year. Ooh, not a basis point. 1/10 of a basis point every year. Feels about right. I don't know. It's like their churn is super low, but you're relying a lot on some hard factors to self-identify with. Oh no, sorry. Should not be doing this right here. Should not be doing that right there. Because this is me screwing up again and realizing that was the total. Come on. Yeah. That's the SIRI total subs. This is where I should be doing my calculations at. And you almost always include churn within your sub calculations. It gets kind of weird if you don't, just because like it's like you're double counting almost, and you end up double counting a lot. You end up kind of being repetitive. I used to do this early on where I used to go and have my sub count, growth, then add in churn, show the number of churn. It just like you normally include churn in your calculations, your year-over-year estimates anyways. So there's no need to do churn. It's nice to have churn there to go and see what the churn is, if it's better or less than expected. But because if I were to go and do 3.4% with this amount of churn, it would negate each other a little bit. So it'll be nice. Screw it, maybe we'll just add in churn. I think them doing 4% too on self-paid subs is probably going to be rather decent. And actually, so if I just go and say they do their 1.8% churn, then we can go and do this, and I'll go and give you all the users, all that stuff, just so you guys can go and see. I'll just keep this same steady state. Do a similar thing up there where I was gonna go and have them lose maybe 0.1% every single time. I mean, what they end up being is a mild telecom in terms of sub growth. A mild telecom. I think Comcast does about 2% internet sub growth. Altice does about 2.5% high-speed internet sub growth, a quarter to a year. So, and some of you may also go and say, why are you doing Q4 when you have 2020? It should technically be counted, because I may have to do it off of Q4 just because the net ads are going to be like close to nothing. Oh, I should be doing net ads for this first time like that. You always do the previous year, even though there are even though we already have a data point, because you assume that you're growing from the year's end. And if this was Q2 2020, different story, because I already have half the data already in, so I maybe use a lower growth rate for this year to go and account for the fact that I already know what half of their subs are going to be for this year. But as of right now, I mean, oh, I did not want to do that. It's already about 5% of the net ads is already done-ish. That just looked like a really low quarter, which Q1s typically are, if I recall correctly. So I'm pretty much saying that they're going to go and add in about their normal amount of subs for the rest of the year. They went and added, you know, let's just do this. Yeah, using Q2 from last year all the way to Q1 this year, we get about 100 less, 200 less than what I predict is going to happen. So I'll go and keep that. That's fair. This is a tougher one. I'm gonna have to take an average here, because SIRI self-paid are like your car subs, 1% a year. Let me just keep that constant. And then maybe halfway through, I start decreasing it. 100. Then I have them losing about the same as up here. Oh my lord. What is going on? So them getting about 50 bips. Makes sense. Guys, I'm so sorry. I have no idea why it does that every single time. It annoys me a lot. So I'm sure it annoys you guys. Oop, we already caught our first error. Good. Saves me a lot of embarrassment for later. Then let's go and do this. Money Boss, what's good, my dude? How we doing tonight? We're on to our next one, my dude. We are on to the Sirius XM here for modeling and Liberty Sirius. It's going to be a big one. The most amount of tabs I've ever seen on one of my models. Because essentially we're doing two models on top of each other. Not a great day in the markets, dude. You are so correct. I've been having a killer month of June, and today really knocked me off my socks. Nothing I can do about it because I'm in the process of switching brokers, so I can't trade even if I wanted to. So I just gotta hope for a bit of a rebound. I will be extremely pissed if me changing brokers causes me to lose a substantial amount of the gains I've been able to do this year. Ooh. You're probably right. You're probably right that the markets come back with the Fed announcement. My dude, I apologize. You're coming in here pretty late to the stream. I'm almost about to end for the night. We're just doing the rest of their subs and then we're done. We already did our rev build. We already did the rev build. We're not doing the income statement today. Because it's just going to be so much more of a pain. One thing I should go and do here though is because we did our fancy, we did our little fancy build here. Need to do all of our groupings, that way we hide them from everyone. So yeah guys, just doing the little grouping function here to hide all of our little calculations that we had over here. You know, all of our assumptions, because we already have this and this, and you know, when we go and change this, that all affects all that stuff. So we just won't see it. We just won't see what's going on. But we don't really need to. And if we want to go and make an adjustment, we can just pop open those guys, and it will be. Then we can go and change it. I gotta go and say, doing these streams is a lot more tiring than me doing my Call of Duty streams, my zombie streams where I'm doing the Q&A. Streaming is just tiring in general, but here I feel like I gotta be a lot more diligent with what I'm doing because I'm, doing financial analysis versus just playing Call of Duty. Okay, all that housekeeping is taken care of. To the subs. I do want to change the song though. To this one, because this one slaps. One of the biggest problems here is doing the installs. I think on average it's been a pretty decent drop. Standard, yeah, I'll do a 2% drop year over year. And this one, guys, because I couldn't find the Q4 data for it, I will go and have to rely on Q1. I think it may pick up later though, so let's do that. Ooh. Why is there a gap here? That's no bueno. That explains it. Dope. ARPU, okay. We're gonna have to be doing our ARPU calcs here, which again I said are not gonna be completely correct with Sirius, just because of the way that they calculate theirs. There's a lot of internal Sirius things that how they calculate it that we could never replicate. So, SIRI rev builds. This should actually just be divided by 12 because it's doing, there we go, boys. There we go, because this formula over here was doing what essentially their ARPU is, right? Their sub rev, excluding connected vehicles, which we can't find from our stuff, plus advertising rev, plus other subscription rev, because this was doing the quarterlies and we did, had quarters next to years. Over here, we were able to just slide over the formula, and oh, I just noticed my my amber shift there. So that should be your calculated ARPU. Using a lot of mouse today, guys. An absurd amount of mouse, actually. We can go and see the climb in our ARPU. So it'll be interesting to see how ARPU is, how our ARPU is versus theirs. It's already higher, but like I said, we can't figure out some of the components that they did. I did the best that I could. but unfortunately, it's just one of those things where we're not given enough information, right? So we're just gonna do the same thing down here for our Pandora subs, and we'll be done for the sub build. And guys, boy, did this take a while. I told you I didn't think we were gonna be able to go and get to our we're gonna get to the income statement, and I was right. I was dead on there, because there's just a lot to do in the early stages of a model that sometimes you can't go and get to, and it makes for a better video series if I don't go and do everything in one video. So I feel like one of the things I did well on Match was, like, we did it in the big chunks, the 3 chunks, and I feel like just having our setup is good for one full video than doing all of our statement analysis and then some of the panels, and then maybe the third video is doing all the valuation stuff that we did. I don't know, what do you guys think? Let me know in the chat what structure you guys want to see. Or maybe we nailed it the first time. Oh, what was the question? The question was, what type of format do you guys like better? Do you guys like how I did Match.com, where we did do you like Match.com where I did it in the bigger chunks, or should we do smaller chunks? Like, I'm probably gonna try and do all the statement analysis this next video, and then go and do like valuation and some of the panels and stuff like that, and some of the charts. Is that the better way to do it, or should we try and cram as much as possible into each video? Because I felt like smaller is probably better. Keep it about what we're doing right now, about an hour to an hour and a half. I'm definitely not using some of that. 4% looks about right for their growth. Dude, it's not worth it for me. It's a lot bigger grind on my part to do bigger videos and sit here and make probably more mistakes than it would be for a smaller video, and just to be able to do it in faster chunks. I mean, what it will be is like when we did modeling Match, right? When it was 3 parts, this one will probably be just doing Sirius. Will be 3 to 4 parts, and Liberty Sirius XM will be about the same amount. So it'll be an 8-part series in all. Okay, so we're right in line with the amount of users that they got last year, and about the same that they, oh well, a lot less than what they did a couple years ago. But so we're kind of crushing it here, guys. Just gonna copy these, except I made a mistake down here. Yeah, this is gonna be like negative 1% growth. I don't, and just kind of keep it at constant. Paid promotional subs, so this is all their premium users. I don't see Pandora Premium being a big thing, especially with Spotify. It's tough to see that. Why is it not doing? Oh. That would explain it. Active users. Alright. Wow, just the decline of... I'm actually not going to go and calculate this stuff. Actually, I could. Yeah. I can do it. I was thinking about not doing it, but I think I can do it. Jamming out now, boys. Feel like mid like negative 6% with that. I don't know, maybe with it faded out. I don't, my dude, I did not have the opportunity to go and view that name. I do apologize there. Because I know you brought that up on the stream the other day. Oh wait, no, no, NKLA, that is the truck company, right? The one that looks like that they one light on their prospectus to, like, it just feels like another Tesla to me. In all honesty, that's what it feels like. It feels like another Tesla. Yeah, you were talking about MXAR. I thought there was like another, like, oh, Light Holdings. That was the other one that you also mentioned. Yeah, Light. That's what I was thinking of when I saw the L. Ooh, that's a sharp decrease in users. I don't know, I feel like maybe they can go and gain traction over the years. Maybe. Dude, Nikolai, dude, that thing just feels like another Tesla to me. Science isn't there. Manufacturing isn't there. Will be a great acquisition by some auto manufacturer out there. But for right now, like, they can't promise anything or, in fact, deliver anything. Let's go and try and do this ARPU real quick. Calculate by dividing the subscribing revenue. Whoa. Average monthly subscriber revenue paid per paid subscriber. So that's gonna be the self-pays, I want to believe. It is sub rev, right? So we gotta go to hopefully share price hits 1K. My dude, do you have some call options on that thing or something? I tend to stay out of the crazy auto sphere. I get enough craziness from being in TMT. I can't handle crazy autos. Why is this so high? Oh, you got warrants? Dude, that's a great trade that you made then. Congrats. That was indeed a great trade. What in the actual hell? Q2. Sever AE83. V83. Oh, because I was completely off by... Wow, okay. That is, of course, my bad. Instead of V83, it should be R83. That's why it was so high. Because, yeah, these two should match up. Because they both have the same amount of data in the sheets. There we go, and that delta looks a lot better, if I do say so myself. This just gets fixed by dividing it by 12, because there's 12 months in a year, for those of you that don't know that. I don't know what's up, we got a lot more viewers now than pretty much any time during the stream. Thank you guys for tuning in. Give me a follow if you enjoy what I'm doing here, if you don't already. And stick around once I finish this last little piece of data. I'll run through some of the stuff that's been happening here on the channel. Alright, licensing cost per users. Here we go. Is calculated by dividing subscriber licensing costs by the number of paid subs on Pandora. Okay, so we're going cross all over the place. I'm also going to do some year over years, like I did earlier. Although, guys, I don't know if you guys saw this. Huge news with Microsoft going, and I even have the little tab saved. I'll bring it over. They announced historical stock data for the data tab on Microsoft Excel. Huge. Huge. I don't know about you guys, since I don't have a Bloomberg, a FactSet or anything like that. You used to, have one of those subscriptions purely go and bring historical data into Excel. It's so dope that they have that now. Because I, for one, have gone to Koifin or Yahoo Finance to download data, And now that I can go and do that, it's just magnificent. It's just a game changer in all honesty. Because like I do like some ARB spreads and stuff like that, or some pair trade spreads where I'll go and take like Lyft and Uber or AMD and Intel and do like a sheet where like it compares the spreads, or like if you can go and you know, what if you're long Uber, short Lyft, or vice versa, and like does like spreads and stuff like that based on that, which is huge. It's just huge that you can go and do that now yourself. All right, so we gotta do our. This track is hot. We gotta do our licensing cost per user. Calculated by dividing the subscriber licensing cost by the number of paid subscribers. So that's our paid subs right there. I want to go and say this is definitely from this programming and content cost, but the issue here is, guys, this includes SIRI as well. This includes Sirius XM. Because one of the things that when they merged, what I did not do is I don't have the old SIRI, the old Pandora financials, and the but then have a separate one for the SIRI. I just kind of combine them. I can try and do it this way. It won't come out as correct, but. And programming and content cost is all the licensing and stuff, so. Just do that for now. It's already going to be a lot bigger. Oh, F1 key. Jesus Christ. I know, Aaron. Thanks for tuning in, my dude. And you're dude, you should have been on earlier when I was going through the entire thing. I'm about to end the stream over here, dude. But stick around because we are going to have some grade A updates here in a few. Oh, and that is my Surface telling me I have low battery. Wrong one, there we go. Okay. Alright, guys. Oh man, we're reaching peak viewership right now when I'm about to end the stream. We want the opposite of that, but when I begin the stream, we want peak viewership. Alright guys, a little review here. A little review for everyone. So today we started our Sirius XM, Liberty Sirius XM model. Right now we're just doing Sirius XM. Liberty Sirius XM is a tracking stock for Liberty Media's 72% ownership of Sirius XM. What we did today was we did our revenue build. and I just saw something that I want to fix. We did a revenue build where we built out all of our different revenues, growth rates, all that stuff, via a fun method of, I didn't want to do an ARPU growth rate like we did for Match because Aaron, no. Aaron, we gotta get you watch at the beginning. So like I was saying here, guys, I didn't want to go and do an ARPU method the way to go and forecast out revenue like I did for Match.com. What I did instead was I made these nice little panels that pop out that are just growth rates based on the averages and a little bit of my assumptions. What's really cool about these is they're all tied up to this little drop down over here. So if we change, I'm about to fix this actually. So if we change this, nice little conditional formatting. So if we do this, all of our little guys change based on where we click there. And while I'm talking about that, let's actually. And that was my laptop saying that it's going to die, or that it is dead. I want to go back to base. Data. What we're going to do is we're going to change our data validation to be over here list. So then this, instead of that, I actually just delete all the data validation. No. That's going to be based off of our front page. So let's pop one of these guys open, just double check. Okay. Let's go and do our decrease real quick. And it did it. All right, cool. I want to do that. That way you can, when all this is done, right? When all this is done, when you're sitting here and you're like, okay, well, I want to go and change our scenario, but I don't want to have to go all the way over to the revenue tab. You can do it here, and you can audit, and you can just instantly see the change in the stock price given your different revenue scenario. Okay, so we did our revenue build, and I got distracted there. What we also did was we did our sub build, right? We built out all of our subscribers for both SIRI and Pandora. Did the metrics on there, so we did our ARPU. There it is. We did our ARPU. We did our ARPU for both. And so now the next stages that we got to go and do, guys. Next video, where you can go and see is we're going to go and model out all of our income statement. I did a little bit of stuff over here before with their revenue, with their royalties going up as they get more artists and content. Programming cost is going to stay roughly flat, and so will cost of equipment. Satellite transmission is going to stay about the same because, well, they got to launch satellites every once in a while. And then customer service and billing, I have it going down because that's really the best synergy that they have, along with sales and marketing from the Pandora acquisition. But yeah, next video, guys, we will be going and doing our entire 3-statement analysis. I will go and say this. Probably what's going to happen is the same thing that happened with Match, where I'm going to go and get caught up by something not balancing in the balance sheet via cash flow calculation, and I'm gonna have to take a day to go and do it. Luckily, if that happens, I'll just skip on, move down to the cash flow statement, try and finish that out. I'm trying to finish out our panels here for our debt, our share count, all of that. Now, as you can see, our working capital is massive compared to what it was for Match.com. And then I think the video after that, we'll probably do charts. And yes, if you like all the modeling, if you like what we do here and stuff like that, join my buddy Aaron and I's Discord, which is, wait, let me grab the link. The Discord is, yes, right here. Thank you, Aaron. Yeah, join the Discord, where you can come and talk with us about finance and stuff. It's fun. Aaron, I love the cross promotion here. So yeah, guys. After that, we'll be doing all of our price target stuff. By then, hopefully, I should be able to have had the Liberty stuff, all their financials put in, and then we can go and do a lot of really cool valuation stuff with. Is it cheaper to buy Liberty Sirius XM, which trades at roughly right now a 30% discount, than it is to buy SIRI? Could you go long one, short one? What's the better investment decision here? I've always wondered it. I've never put the time into it, and now I am. So that should be fun. Also guys, we got some big news over here. I know some of you guys are thinking, yeah, well, I've watched some of your live streams in the past, and some of them have been deleted because Twitch can only keep so many videos. How in the world can I go and watch some of those past streams, some of those previous, zombies videos, some zombies Q&As that you've gone and done? How can I go and watch that? Well, at last, the YouTube page is up. It took forever to rip stuff from Twitch and to upload it. The link is of course in the info page of the Twitch channel. Here you can go and see our curated playlist. You can go and see, if we go over here and review the playlist for our modeling, we can go and see the entire match series, Adobe, which we did last week. You can go and see all of that right then and there. So yeah, go and check out the YouTube series if you guys want to check some of these old videos out. I was mentioning Match a lot tonight. Brief yourself up on the Match, maybe Adobe. And yeah, guys, thank you so much for watching, and I'm gonna end it here. Hopefully I can see you guys on Friday and Saturday when I go and do the Zombies Q&A live stream. It's always a fun time. We get to game, get to ask some questions, we get to have a nice conversation, and who knows, your questions may show up in the highlight reel. I know Mr. Money Bosses did from this last session, so hopefully I can see you guys then, and if not, I guess I'll see you next time when we model.